Hello traders, John Hyaden here with another daily revision. Let us begin. Before we start, as always, I suggest you stop the video and read the general risk warning. It is very important for you to understand the risks under trading. Upcoming events. All events are taking place in GMT hours. I recommend you write the events down in your calendar so you would be able to trade and notice them before and after the announcement. As you can see, for the Euro, 28 finance ministers meet once in a month to discuss issues like taxation, regulation, economic policy, and more. High volatility is expected among European pairs such as the pound, Swiss franc, and the euro itself. So notice today during the day we should receive some announcement from the Eurozone. New Zealand dollar, the Reserve Bank governor will announce what is expected for New Zealand monetary policy, as well as for the euro. Strong movement after the announcement can create great short-term opportunities for day traders like us. US market, and about the crude oil, I will talk about it in a bit. US market yesterday trading session closed lower. The S&P 500 went down by 0.98%, while the Nasdaq and Dow Jones fell both by more than 1%. The idea behind the drop came mainly due to the fear of higher interest rate next month, which of course affect directly the US stock market. Eric Rosengren, the 13th president and chief executive officer of the Fed, said in his speech yesterday that the interest rate should start raising gradually, and another postpone, in his opinion, should not take place if the US economy keeps reporting great data. While US unemployment rate and non-farm payrolls announcement from Friday show great strength, China keeps underperforming in terms of consumption, exporting, and other sectors in its economy. This might be the only reason for the US to postpone the increase in interest rate one more time, but at the moment the feeling the market is going toward higher interest rate already next month. And as you can see in the graph below, this is the S&P 500 daily chart. There is a huge red candle day. We expect these candles to appear in the next few days as the downward movement toward the announcement for higher interest rate is expected next month. Moving on to commodities, gold keeps straggling toward the last resistance. In today's early trading, the gold gained some points due to weak China data that basically hint we should see more stimulation and easing plans from the Chinese government. However, the few points it gained today are like a drop in the oceans, and the downward trend we started 3 weeks ago should continue after the small correction. As you can see in the graph below, this is the gold daily chart. Here you can see the rally downward, and with a small correction toward the last resistance over here, which should continue after reaching this resistance level here, should continue its downward movement. Crude oil, crucial day for the commodity. Using technical analysis, we can see the crude oil is now sitting on a $44 support, which is a very strong one. In the last 6 times we met this level, the prices bounced back to at least $48. Same is expected here, and the stimulation that can cause this jump upward is today's API weekly crude oil. A lower number in production will represent less supply, or in other words, less supply, higher prices for the crude oil. Watch for the late announcement at 9:35 p.m. GMT hours. This will set the rhythm for the commodity. According to analysts, the price should go higher, since usually on strong support like this, the price tends to bounce back. So if you guys are planning on to trade the crude oil and you're planning to do it right now, so it's better if you go for longer term trades than few minutes, since the crucial point of the day will be at 9:35 or 5 minutes after the announcement. As you can see, of course, in the graph below, this is the crude oil daily chart. We're sitting on this strong support area which bounced almost 6 times, and this another bounce is expected for the 7th time. Forex dollar index, due to the strong results on Friday from both unemployment and non-farm payrolls, the dollar reached 7-month high last week. leading to a stronger upward trend, which is not expected to stop. Sorry, which is not expected to stop. After yesterday's little pullback, the dollar kept its upward movement. The buyers are thrilled to buy and join the trend, thus analysts expect in the next few days to see higher value for the dollar, at least until the next resistance you can see here in yellow, in the graph below. Very, very strong trend upward. Buyers are inside the dollar right now, and nothing is expected to break this trend upward. Therefore, call options on pairs, on dollar pairs, are more than recommended. That's it for today. If you guys have any question, please contact me on binaryoptionsreview@gmail.com, and you can visit Ken's blog. There are many new articles and breaking news that we're trying to keep updated every day on binaryoptionsreviews.net. That's it, guys. I'll see you again tomorrow.